Hello traders, Gary Wagner here. Just after 1:30 in Honolulu, 6:30 in New York. It is Tuesday, 15th day of December 2020, and this is the Daily Report for Gold and Silver. A rare occurrence when common sense came into the bipartisan group and they altered their proposal and cut it into two parts. The first part containing the bulk of what has been agreed upon, and the second part on the two primary issues, liability and state aid, into a second package. That almost guarantees the first proposal will pass and aid will begin to flow before the end of the year. That certainly had a dramatic effect on U.S. equities, a dramatic effect on the precious metals, and as we'll talk about during our charts, you'll see why I believe the proper action might in fact be to enter the market from the long side. But before that, let's take a look at current pricing. Traders, extremely exceptional news today as common sense prevailed by the writers of the bipartisan proposal as they broke it into two separate bills, the first containing all of the components that both the Democrats and Republicans had agreed on, a second bill that contained the two primary issues that had stalemated the proposal actually going into fruition and getting passed. The first proposal that should easily pass is a $748 billion package. The remainder, or the $160 billion remaining, contains those issues such as liability for businesses and aids to states that both sides of the fence could not agree on. That definitely changed market sentiment in gold, resulting in strong gains across the board in the precious metals, as well as dollar weakness concurrently. February contract of COMEX gold gained $25.40 and is currently trading at $1857.50. There are a couple of patterns that we can instantly recognize and technical indicators suggesting the proper action is to re-enter the market from the long side, but we'll talk about those parameters when we pull up our charts. When we look at spot gold, that is currently fixed at $1853.30, just under the February gold contract. Silver had very strong gains of almost 2.5%. Gaining approximately 58 cents, with the most active March contract currently fixed at $24.63. The dollar did go lower today, losing about 0.3%. It continues on that downward spiral, and with the FOMC meeting concluding tomorrow, it is highly anticipated that statements made as well as the press conference following the conclusion will have a bearish bent to it in terms of how the dollar reacts. In other words, we are expecting further downside from the US dollar. Lastly, I want to take a look at the ETFs because that would be part of our strategy if we issue a buy signal. And first, GLD gained $2.40 a share and is currently at $173.94. And lastly, SLV gained almost 3%, 2.89%, and is currently fixed at $22.80. Let's take a look at our technical studies and discuss our strategy. Traders, before we view both gold and silver charts to give a comprehensive explanation of the technicals with the fundamentals that underlie the move that we're witnessing today, we're simply looking at a gold versus dollar chart. And what is most noteworthy is that we have the correlation, which is a negative correlation, and traditionally what we expect, and that is when gold moves higher, as you can see here, we see the dollar move lower. And that particular relationship has definitely oscillated between a negative correlation, which is normal, to a tandem move, which occurs only briefly in specific instances. This is a very positive undertone for gold moving higher. Based on the new fundamental news that was released today, we definitely are seeing technical indicators that suggest that the bearish downside pressure we've witnessed for the last week could have concluded. The major thing that we want to look at first is former resistance and the level that became support, which comes in at the 38.2% retracement at 1846. As you can see on this daily chart, we definitively had a break and close above that price point. We've also talked about why this price point is significant, and it really has to do with a series of bottoms both here that occurred at the end of September, as well as action that we saw throughout November in which the market would trade down to that particular level, and those lows became support because it would bounce back to the upside. That, of course, ended at the end of November when, for the first occasion, we saw gold break below that particular price point. That's this candle here. That correction took the market down to these lows at 1771. And of course, there we saw a basic change because it had broken through the 200-day moving average, and we identified a bullish engulfing pattern, and we simply wanted to wait for a small time to see a confirming candle come in afterwards. And because of the real potential for further downside, we were extra cautious in that trade and actually implemented it on the day after the confirming candle came. The market did move higher. It broke back above the 38.2% retracement. It broke back above the 200-day moving average, but as it hit the 50-day moving average, we saw real resistance coming into the market, which took pricing once again below this key level. So what are we looking at now? When we look at this chart, as you know, I have labeled two areas, resistance areas. The first one coming in at 1848, and the second one coming in at 1876. That's the 50-day moving average. Now that we have broken above that key level at $1,845, a confirming candle tomorrow, meaning a green candle with a higher high and a higher low, could in fact take market prices beyond the 50-day moving average. And that would be extremely significant, although if we see a sizable move that comes right to that price point, we might still enter the trade. There are other parameters that we're looking at, and in particular, it has to do with what statements come out of Chairman Powell during the conclusion of tomorrow's FOMC meeting. However, traders, for the first time in a couple of weeks, I am excited about the potential for us to re-enter a new stage in gold, taking it to higher pricing, with major resistance coming in at approximately 1960. And that, of course, is based upon a series of tops that came in really in the middle of November right here. We will look to see if we get a confirming candle tomorrow in gold. If we do, we will probably issue a buy signal with stop suggestions and placements. But traders, this is the news that we have been waiting for. If you recall, I believe it was about 2 weeks ago, I titled my opening letter, "We Need a Christmas Miracle." Well, I believe today we got that. When common sense broke the proposal into two components, the one that stalemated the Democrats and Republicans from agreeing, put aside separately, and leaving the bulk of the aid package that was agreeable to both parties in one bill that will easily pass before the end of the year. It's so greatly needed. And traders, I am actually more excited about the upside potential in silver for a couple of reasons. We'll get to that in a second. But first, on a technical basis, what we are seeing is something similar to gold. First, it broke above its 50-day moving average, which has absolutely been a point of resistance over the last, call it 5 to 8 trading days right in here. Today was a defined break above that. In terms of resistance, it falls at 25.18, which is the 100-day moving average, and then again at the 23% Fibonacci retracement. But the reason that I have such excitement about the potential in silver is not only will it react in a similar manner to gold as a safe haven asset moving higher, but the news that the proposal will go through, plus statements that could be made by Jerome Powell tomorrow could definitely propel a rekindled rally in U.S. equities, which means that the industrial component of silver would also play a role in how high it goes and how quickly it gets there. So we have the makings of a beautiful trade, pre-Christmas trade in both gold and silver. Today was the first step that we needed to see, and tomorrow will define whether or not we pull the trigger and enter both gold, silver, SLV, and GLD from the long side as our next current trade. Traders, this has truly been an amazing day with an amazing outcome. Tomorrow, of course, is the FOMC meeting, and I'm truly excited of what lies ahead. I want to do a rare shout out to Lee S. out of Honolulu, Hawaii, who is not only a subscriber but has become a very close friend of mine in his marriage on Sunday. Lee, congratulations, and I wish you and your wife all the best. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.